Morning, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to final zila 2.0 session on order flow trading strategies for intraday trading and also scalping. So, we in this session we are going to discuss more about order flow trading strategies, right? And mostly order flow trading strategies, and we are also going to revise the old strategy which has been discussed and how it got reacted, and what are the exponential odds involved in those strategies. That's what we're going to discuss. This entire session is dedicated only to order flow trading strategies. Of course, it will be a short 2-hour duration session, and afternoon we will discuss a mix of order flow and market profile related studies, and of course we'll be closing the session with an final market outlook. And markets are shaping really good, but um, yeah, I think we can get into the session. Before getting into the session, just give me a quick confirmation that the audio and video quality is good so that we can start with the session.
That's right.
Yeah, thank you. So before getting into the session, would like to address a couple of queries from the participants. So this is one of the questions received in the morning. Can we use MCX data 9 a.m. to 11:55 p.m. or we need to go with the international 24 hours data for commodities like crude and metals? And that's the question. So far we had seen examples from Nifty, Bank Nifty, and couple of stocks when it comes to order flow. So can we use for MCX? Will the same strategy works for MCX? Of course, it's the same auction behavior. So what we are talking here is the auction behavior, which is relatively same across different instruments, because fundamentally order flow talks only about the buyers and sellers interaction. So it doesn't matter whether what kind of trading instrument you are. Is it a currencies or MCX or stocks or bonds or ETF? The fundamental principle of the auction remains the same, and so far all the strategies are based on the fundamental principles of auction market theory. And so yes, naturally it works good. So should I have to look at the M6 data or international markets? In that case, I would say that if you want to trade M6, you have to watch M6 markets, even though fundamentally the price is driven by the international markets. So basically the crude is M6 crude usually follows NYMEX crude because the settlement also based upon the NYMEX crude. So fundamentally it follows crude, but at a very, very micro level, at a very short term level. Not necessarily the correlation has to be there. So we have a different set of buyer sellers here. So naturally, if you want to track, if you are trading MCX markets, then M6 order flow is what you require. But if you want to get a bigger view, like in top-down analysis, something like that, and international markets, it's one place where you should be looking into the top-down analysis. But when you are narrowing down to core level, when you are trading M6 crude, then it's good to go with M6 crude alone, right? So no doubt about that. Same applies to metals as well. The second question is, if you can go with M6 data, how frequently market profile structure anomalies will be corrected? See, I don't trade M6 crude. I don't watch M6 crude very often, right? Or at least from the profile perspective. I believe the same market profile principles are applicable to stocks, MCX, currencies. No matter what, the principle is applicable to any number of data points. But then, if you ask about me whether the anomalies will be getting cleared at 2 to 5 days, you need to observe it. That there is no shortcuts here. I'm observing for Nifty, Bank Nifty for last 5 years. No, so I can fairly tell how frequently it could fill, and what is the odds that the filling odds that what is the filling odds of an AB poor high or an AB poor low, or what is the odds of a back-to-back clearance, how fast it could fill, right? So based upon my last 5 years of experience, I can share this information, but MCX data I don't have and screen time, so it's difficult to comment on that. So one have to go and experiment it. That's what I can say, right? So can we use order flow for commodities MCX data? Of course, you can use it, right? So,
Sir, global data provides 24 data, sir, international market.
no, global data feeds currently provides only NSE, MCX, and currency data. If you want international data, you have to go with eSignal. So here is eSignal. So it's a bit costlier.
You said it's $140 per month, something like that last time.
eSignal, they have multiple packages. One of the thing is eSignal Premier, whereas they provide eSignal platform plus data. So this comes around roughly around $220 to $240 per month will be if you want to subscribe only for NSE and MCX. Right? So whereas they have another product, it's called eSignal only data package, which they don't usually display on their portal because it's only data. They don't give eSignal platform. So currently this comes around 120, probably $140, including NSE and MCX. NSE plus MCX. Only futures, right? So futures. If you want to take cash market, then probably the charges will be a bit higher. It comes around $200 because they add an additional $35 for spot pricing data. Again, another $10. So probably another $40 to $50 will be added on top of this. Right. So
what is the platform, sir? The eSignal platform?
eSignal itself a platform. eSignal itself a platform. Along with that, they also data vendors. So using eSignal, you can connect to any popular softwares like Ami Broker or Ninja Trader. You can connect with them. So the data is costlier because you can get any international markets. Closely 196 countries of data. You can get commodities, currencies. So forex markets, or you name any markets, you'll be able to get it. You want Tokyo Exchange, or you want Osaka Exchange in Japan, or you want NYMEX data or gold data, CME, ES Mini, European markets, right? Or Dubai Exchange. So you name any exchange, right? So they'll be able to provide you. And I just bought it. I'm a eSignal user for right from 2013 to 2015 onwards. 2016 till mid of 2016, I was using. But lately, global data feed, they started tick level information, right? So now again, I started using eSignal just to observe that what is the difference between the order flow. So so far my understanding is that you can mute, there is a background noise is getting generated. So based upon the talks which I am done with the recent data vendors, global data feeds, they are generating 1 second data. So 1 second, it's kind of an what they call eSignal used to call as Tenet feed or something. That's what they last time they said it to me. And but that processing speed is 1 second interval. So 1 second interval. So each and every tick will be 1 second. Even though even if 5 trades, right? 5 trades happens in a day, happens in a second. Let's say assume that 1 second, five trades are happening second. So they give you as a consolidated snapshot feed. So that 5 trades will be represented as a 1 trade in that 1 second interval. But the volume will be an actual volume, but it will be showing you was only 1 tick there. But the real tick feed is like each and every tick, it will be plotting it. That is not the Indian vendors are doing. In fact, the exchange itself not providing the actual tick by tick feed. It's called tick by tick feed. And the exchange currently used to charge closely around, I'm not sure about that, but only for the, currently it's available only to the HFT members. Right. So for the data feed members, currently global data feeds and true data both are processing at 1 second interval. Whereas eSignal, this is my, I haven't, I don't know what is the current speed, but when I just checked with last time, they say like 450 millisecond. So 450 millisecond, even if 5 trades, let's assume that 5 trades are happening in a second. 5 trades happens in a second, maybe it will be shown as a 2 ticks. It would have been shown as a 2 ticks, whereas in this case it would have been shown as an 1 tick, like a 1 tick or 1 trade. Right? So, but still they're also not doing the raw data. It is also a consolidated snapshot feed. Okay, so which is good. Obviously eSignal is good because they are processing at a few milliseconds. So instead of 1 tick here, you'll be getting more ticks, but the volume will be remain the same. You don't volume remains the same in both the cases, remains the same in both the cases. Of course, there won't be much of a context difference. Volume remains the same. Okay, so one of the example I would like to show here is that, so we went back to check why this many times we've seen that high buyers or high sellers are getting trapped, right? So let's assume that this is global data feed and this is eSignal. The data is same. So it's eSignal. It's the same data feed, but structurally there will be a minor difference will be there. Most of the places you're going to see the same thing. 3, 4, and 5. Okay. 1 and 2 and 3 and 4 and 5. If the trading is happening really slow, assume that Nifty futures are getting filled at every 1 second interval, so the data will be remains the same. You see a 10, and here also you see a 10 over here, right? At times, if the data is moving fast and trades are happening really faster, within less than 1 second, there are 3 trades or 5 trades are happening. 100 quantity will be like 100 here, 100, because it takes a consolidated feed, whereas eSignal you will be seeing like a 50 here and remaining 50 here, something like this, or 70 there and the 30 there. So, but the volume filling will be the same way. At times, what happens? Most of these vendors, most of these global data feed vendors and eSignal vendors, they are mostly relying on an uptick downtick feed. So they don't get the actual bid ask raw data because exchange itself not transmitting. So they try to figure out based on which is whether it's hitting the bid or ask based upon the what the exchange feed is giving. So exchange delivers them in a real markets, and they used to process those information. So based upon the vendor capacity, they are processing that information as much as possible to figure out. So nobody really knows whether it's a big buyer or a big seller. Okay, so basically they are, to my knowledge, right, the way I spoken to the data feed vendors, nobody knows whether it is an it's a buyer or a seller, but based upon uptick and downtick, probably the global data feed interprets like this. If there's next tick is an uptick, maybe this tick would have been happened with some 2 or 3 trades. So this guy will assume that is a buyer, so he puts on the buying side. So let's say 2000 quantity on the buying side. Whereas for a eSignal, it would have been like this. There is one uptick and one more tick here. This would have been done some 100 trades. This would have been done 100 trades, and then a down tick there, and then a down tick. So remaining 1900 trades would have been happened. The same 2000 quantity here. So this uptick came up with 2000 quantity. It would have been like same 2000 quantity here in global data feed. It shows 2000 here, whereas this guy will interpret this as a buying quantity. So he puts on the buying side 100, and the other thing 1900 he puts on the sell side. So 1900. So 1900. That's why the context differs only at the edges mostly. That's why someone is getting a big buying quantity, someone is getting a big sell quantity. The reason is because both the vendors are using uptick downtick methods. Both of them are not getting the real bid ask information, right? So And both the cases, we at the top, we don't know whether they are big buyer or a big seller. No idea. No, who is right. We don't have an idea because nobody knows that. Everyone is assuming that this is a buying activity or a selling activity, right? So since the real bid and ask information is not getting transmitted, so that is why the real difference is coming here, right? So so if you are finding, okay, what I should do, how can I trust the data which is coming in? Basically, you don't need to. There won't be much of a difference. As I said, these guys are using uptick, downtick data. Most of the time, it's 97% reliable. Remaining 3%, you're going to get such kind of information, especially at the open. If you look into the different data vendors, the opening will be market will be very volatile. During those high volatile markets, the different vendors give different information, right? So because of their depends upon the individual processing speed. That is why the global data feed and true data order flow never matches most of the time. I mean, most of the time it matches, but some 10% of the time, if you see, there will be a difference. If you see a difference between global data feed and e-signal, again, you'll be seeing a subtle difference there. So it is basically because of everyone's processing speed, and basically because of the different processing speed, e-signal provides more tick level data, whereas global data feed provides 1 second data, and true data also provides 1 second data interval. And based upon uptick and downtick, at times there could be a variation. And other than that, at times since they are coming in a packets, right? So since the informations are coming in packets, some of the packets could be missed, which Ninja Data will not do auto re-backfill. So we need to do a reload. Once you reload the historical data, you will find more difference coming into the charts, right? So which could be more accurate. Maybe yes, e-signal could be more accurate, but when the context perspective, it doesn't matter. If you see a big buyer here at the day stop, I also see as a big seller or a big buyer. But at the end of the day, whenever you're seeing a big buyer or a big seller, that's why I say, like, it doesn't matter. Price often tend to re-backfill. I mean, price tend to revisit. Maybe you might see a temporary sell-off. Either it could go for intraday crash, or it could there could be temporary sell-off, but eventually price comes and clears it. So far, wherever we've seen a big buyer or a big seller at the edges, at the day's edges, maximum it got revisited in less than T+3 or T+4. Very rarely yesterday's price action. It took almost more than 5+ days to revisit towards those 10,960 levels. Right? It is a surprise to me that every time there was a big buyer or a big seller, it ends at the day's high or a day's low. We call that as an unsecure high, because that's a poor way of doing in business, right? So it's kind of a failed auction. It is kind of an unfinished business when you're seeing such a big quantity traded at the edges. Price usually comes and clears that, right? So which data feed I should trust? You can trust global data feed also, you trust e-signal also, but try to understand these are basic differences. No, we can't do anything unless the exchange started transmitting the real bid and ask information, right? So real bid and ask information, it will be like terabyte of data. So you cannot process it, because in some time back we took such kind of data from the exchange to do a backtest at tick level. So what we found is that in a day of data, at least Nifty futures alone contains 19 GB of information. 19 GB of information. Only one data per day, almost 16 GB. It comes from, I'm sorry, it's 16 MB or so, 16 MB or 20 MB per day of data. So 20 MB per day of data is quite huge, phenomenal. If you're going to receive for 100 symbols, you'll be like getting almost 200 MB of data of internet bandwidth will be evaporated every day, every single day, right? So but this is what only for 10 symbols. If it's 100 symbols, it will become 2 GB of data. 100 symbols, if you're going to receive, it will be 2 GB of data you'll be receiving from the data vendor alone. So and moreover, since all these servers are hosted in India, they have to pay for the bandwidth charges as well. So data vendor, they don't want to pay much for the bandwidth. So usually the bandwidth charges comes around 25 to 75 GB, 75 rupees per every 1 GB, I guess. So usually data vendors, they don't like it because none of the Indian data centers, they provide unlimited data bandwidth, right? It is available in across the overseas markets, but the Indian markets, they don't provide unlimited bandwidth servers. They call it as an unmetered servers. Okay, so maybe that is the only reason they could be operating at a 1 second interval, these global data feeds.
Sir, and you also said these e-signal are providing level 2, right? And level 5 something. So what's the difference?
E-signal provides level 2 data only for NSE cash markets.
Okay.
Only for cash markets.
What is the difference, sir?
The difference is that you can use tools like Bookmap. You can use the tools like Bookmap, or you can use those tools to understand where the liquidity is there, right? But level 2 data is only about 5 levels of depth of the markets, right? So that's what Indian vendors receive, whereas tick by tick they receive up to 20 levels. With level 2 data, you can able to, if you're using tools like Bookmap, you understand Bookmap, right? Bookmap is the next.
Yes.
Bookmap is the next level of order flow where you can see where the pending orders are. So you'll be able to construct how the order book will look like over a period of time. As the price moves up, it shows how the players are positioned on the upper side. As the price comes down, you'll be seeing how the pending orders are remaining in the system. So you'll be able to get a complete picture about the market liquidity.
But we cannot trade based on the cash market, right?
No, you cannot, because cash market players are different and future market players are completely different. Even though they both are synchronized, the players the players are completely different.
Sir, and I also have one more question. Like, can any of these data can be plugged in to the website?
So if you want to plug in data to the website, first of all, you need to get the exchange permission.
Okay.
Right. So without exchange knowledge, if you're going to transmit exchange data, it's a copyright violation, because exchange data is exchange copyright. Just like that, you cannot display. So anything you're going to display, open, high, low, close, or you're going to make any derivative data on top of it. The first thing what you will be getting is a court notice from exchange.
Okay.
So you have to pay to the exchange, and it's pretty costly. And it comes at a different level: 1 minute data, 5 minute data, or 10 minute data. You can go to the website and you can discover the pricing. So real time data, whatever depends upon what data you want. They charge a hefty fee for that. It's globally applicable. Almost every exchange charges the same rate. For a real time data, they charge 20 lakhs plus GST per segment. For NSE, and M6 charges closely 35 lakhs. This is 1 second data. This is for a 1 minute candlestick data if you want to show in a real time charts. And tick level information is quite costlier. They have to pay closely 44 lakhs per annum. And unless you want to do it as a business, right? So you need to have a very bigger plan. You cannot it's not a low cost investment. Understanding global data feed alone, they are spending closely 1 crore of money for everything, for the taking the data, maintaining the data, employees. Closely GDFL spends 1 crore only for Indian markets every year, and probably e-signal could be into 196. You can able to calibrate the cost.
Okay.
So that's the amount of money is involved when you want to do data vending or want to display the websites. And coming back to the topics. So what are the strategies we have discussed so far when it comes to order flow? Can we list down list of topics? So order flow trading strategies. The very simple strategy which we discussed is the imbalance strategies, momentum imbalance, or you can also call that as a stacked imbalance, right? So usually for Nifty futures, or Bank Nifty futures. I prefer monitoring 10 times of imbalance. 10 times of imbalance between the bid and ask. And for different symbols, it could be anywhere between 5 to 10 times. It should be a decent number to watch for an imbalance, right? So I prefer 10 because 5 times usually it happens with most of the places, but X10 it happens at very rare places, and that too. These references, if it is happening at key reference level, so where to monitor imbalance, stacked imbalance. Okay, first of all, let me explain what is a stacked imbalance. If you look from the order flow perspective, you might be seeing a shades, like, so there'll be white numbers, and this will be painted in red. This would have been painted in red because it would have been 3 times of activity. And again, there is a 3 times of activity there. Maybe I'll show you in this example. You can see stacked sellers coming in let's see where stacked sellers are coming in. For a stacked sellers, we need minimum 3 bars to have an difference between the bid and ask. We compare diagonally, and if it is more than 10 times, it plots in a block of red. So consecutively 3 or more reds we call that as a stacked imbalance bar, right? So that zone is a critical zone where momentum sellers are really pushing really hard compared to the sellers are here making more effort compared to the buyers. And you can see that the buyer side there are no liquidity there, and selling side there are more liquidity coming in. Sellers are pushing down, so means more limit buying orders are there on the other side. Could be stop loss or could be something else. So they are really pushing it down, and the difference between the bid and ask is more than 10 times. So that is why we call that as a momentum imbalance or a stacked imbalance. It's called stacked because consecutively more than 3 or 4 blocks are coming next to next, right? So back to back. So that is clearly an example for a momentum imbalance. So now where to monitor? You have to monitor at key reference areas like an daily high, weekly high or lows. Or you can also monitor at an multi-day high, multi-day lows, multi-day high or multi-day lows, or swing high, swing lows, any swing high or a swing lows. I mean the previous swing high or swing lows, there you can monitor. Or you can also monitor, if you are using market profile, you can also monitor at rally high to look for an acceptance, how the acceptance is coming in. When the price is breaking the rally high, is the momentum is getting generated or not. Or a pullback lows, single print zones. When the single print is getting crossed, whether the momentum is getting generated or not. Right? Single print zones like a double distribution or a triple distribution. When the price single prints is getting those short-term reference levels, price is approaching those levels, you can use order flow to understand momentum imbalance, to understand whether the momentum players are in control or not, right? So that is and you can use that stacked imbalance. If it is happening at a key reference level, then if momentum imbalance happens at key reference levels, then those levels acts like a immediate support or resistance for scalping. Well, you can use that level as a scalping zone. Let's say this is my previous day high. And price is going up to the previous day high. And when the price is going up and when it is plunging down, it's showing a lot of momentum. I'm seeing a lot of momentum on the downside. So it's breaking the previous day high with a strong momentum. Then you can initiate the trade. You can initiate the trade by looking into when the price get back into the zone with a lot of stacked momentum. I'll say SM, stacked momentum. Then in that case, you can join selling the crowd and you can expect some sell-off. That stacked zone will act like a potential resistance on the selling side. Whereas on the downside, it could act like a potential support. A potential support could be something like, this is my previous day low. So many times you would have been seen that price breaks previous day low. It does something. It comes over here. It mostly does nothing. Be wavering here and there. But at times you could see the price jumps up, come back into the previous day low range with a stacked momentum, buying. So stacked momentum buying. So you'll be seeing a lot of consecutive green bars in your order flow. So that itself, it brings more scalping odds towards it. You will have some greater push, and that reference level will act like your potential support zone. At times, what happens, even the price touches that level and then it bounces back further. So that zone acts like a potential reversal zones. So that is one interesting place where you can initiate a trade. The second thing is zeros between momentum imbalance. Right? So this is usually happens the places like this. Maybe I'll take a better example here. Many places you could observe that kind of momentum. So let's take this example here. So there is a lot of momentum getting generated in this band. So watch this band. In this band. So here is what the momentum got generated, and you can see here this area. This is zero over here. The zero over here is coming between the stacked momentum. So you can see a lot of momentum selling activity. In that momentum selling activity, as zero is coming over here, then that zone will act like a potential resistance zone. That zone could act like a potential resistance zone for you. Right? So any such stacked momentum is getting initiated, then that is one of the reference level where you can still use that as a resistance zone for a scalping. For scalping purpose, you can use this.
Both should be on same line.
What is that? No. I'm not talking about the buy side zeros. I'm talking only about the sell side zeros, where the zeros are stuffed in between the stacked momentum. You can see how many stack momentum sellers are there: 1, 2, and 3, and 4. So total five stacked sellers are there in one block. More than 3, we call them as a stacked sellers. But inside the stack seller, it is stuffed with a zero. It's stuffed with a zero. That means the momentum sellers are pushing really hard when you're seeing zeros in between the momentum selling activity, right? So that zone acts like an immediate resistance. You're getting my point?
Yes, could you explain it once again?
Okay, look into this example. It is a red bar, and we are seeing a lot of stacked momentum sellers. Why it is momentum sellers? You can see 257 quantity sold here compared to 17, and 19 quantity sold here compared to 0, and 4 quantity sold here compared to 0. And when the price was moving down, it left a 0 there. That means that's a zero liquidity zone. Neither buyers are not there, sellers are also not there, and the momentum sellers are pushing it down. It left one point completely. Nifty got skipped completely 1 point. There is no trades at all. Next trade happens after down 1 point. because the sellers are pushing really hard and no liquidity available in those zones. So it's when you're seeing momentum with the zeros which is stuffed inside those stacked inside bar, that will act like a immediate resistance zone for only for scalping purpose, right?
Yeah, understand.
So
Yeah,
in that we can short, right, sir? Based
Yeah,
on
you can use that as a reference and you can short.
okay.
And okay, so
That will revisit again, isn't it?
not necessarily.
Okay.
There are different zeros. I'm going to talk about that. Those are zero liquidity zones that will revisit. Something like, let's take, that is only one place. But when you're seeing a lot of zeros there, we call that as a zero liquidity zones. Where exactly there are a lot of zeros I had seen. So you see that there are a lot of zeros in this band. So you can see a bunch of zeros here.
it will be there in the A period, sir, usually.
So you see these zones 2 0 2 0 1 0 0 0 0 1 0. All these are low liquid, low traded zones, right? So even here also, so these are low liquid zones. A lot of stops would have been triggered. Momentum sellers are pushing it down, right? You are seeing a stuff to zero also. You're seeing a stuff to zero also inside. Momentum sellers are really pushing it down. That's your immediate resistance. Price plunges and it plunges. But if you're seeing a lot of zeros over here, those zeros are meant to be revisited back. Price usually tend to revisit those zones. So price tend to, you can see a revisit towards zero liquidity zones. Zero liquidity or low liquidity zones. Those zones are usually the reasons because why it is happening is because mostly stop hunting would have been triggered there. That is the reason it is not getting any fill at that levels.
Sir, here I am confused, sir. Here,
Yeah.
zero between the momentum. In the right side, we are getting zero liquidity zones.
Yes. In that case, you can, I mean, it's not a good auction. It is not a good auction. Price can be plunged down, but eventually those levels can be cleared back. That's the only information you can get from there. So
Zero liquidity means buyers are zero at this moment, right, sir?
So why we get a zero here?
Right, sir.
Can you say why we get a zero here? Why you are getting a zero?
Because at that time, at that price, buyers are not there.
No. Limit order sellers are not there. If limit order sellers are not there, then definitely if they want to move down, assume that there is an to explain this, let's take one step at a time. Think about this zero. Okay, why there is a zero here? Because first we'll check why there is a 1 here, then we'll talk about zero. Why there is a 1 here? What does this 1 means? It's a market, one lot of
Limit sell order.
limit sell order and or one lot of market buy order. It's a market buy order or one lot of the counterparty is what? One lot of limit sell order, right? It's limit sell or a market buy. Either a market buy or a one lot of limit sell order. That's what that one represents. The zero here represents that at that level there are no limit sell order. There are no limit sell order placed at that level. So means there are at that level there are no liquidity. When I say liquidity, I'm talking about limit orders. And there are no limit order at that place, no limit order sellers at that place. Market orders, when somebody is pushing market order, price will jump to the next level. Price will jump to the next level. So how does this zero could happen, right? When the price is plunging down, let's say price is plunging down, it went to this level, 22 lots got punched. Now market orders are pushing it up. When the markets are pushing it up, they got a 1 here, and they would have got a 7 there. Let's say the price went down. It went to some 22 lots got filled. When they are going up, When the buyers are pushing it up, they got a 3 here. The next trade, they would have got another 3 there. That means the intermediate 0 got skipped. At that level, there are no market, there are no limit sell orders. If there are no limit sell orders, obviously you don't get a market fill there. Only if you get if somebody is placing a market order, the next limit sell orders are available at 3, right? So that 3 is getting filled. So that 0.
Sir, this left candle is sell, right? Right candle is buy candle.
See, let me very clear. Okay, I'm not going to repeat this again and again. This is the buy side market order. It's a buy side market order on the right hand side, or it's a market buy. It's a market buy, and it is a buy side, or it is a limit sell. It is a limit sell. So if you are seeing a 3 here, that means 3 lots of market buy order got punched, which matched with the 3 limit sell orders. The same case here, if you are seeing 147 here, the 147 represents what? Somebody punched market sell orders, or in the order book previously, it was the liquidity was a limit buy order in the order book, which got matched with the market sell order. Right? So who initiated the trade? Market sell order initiated the trade, and the counterparty is the limit buy order. When you are finding a lot of zeros here, that means price traveled in this zone very less amount of time. Buyer's interaction was very less in that places. The market buy interaction is very less. The market buy interaction is very less. So that's why we call that as a low liquid zones on the buying side. But sellers are pushing really hard. That's why we're getting a stacked imbalance over here. This zone represents a lot of momentum selling is happening. Momentum sellers are really pushing it down. But on the buying side, there is no responsive activity from the buying side. This is buyers are not there. The buyers of that zones are not there. When I say buyers are not there, I'm talking about limit sell orders are not there. So that means market buy orders have been placed yet. So price is pushing, only sellers are pushing the price down. Aggressive sellers, the market sellers are pushing the price down, and you are getting a lot of zeros on the right hand side. That means there is no liquidity on the limit sell side. Okay, maybe it's difficult to understand, but you have to conceptualize, visualize, take some time to understand why this is happening, right? It's happening because the aggressive sellers are there and aggressive buyers are not there. They're not. The aggressive buyers are not there, and they are really pushing it really down. And the concern here is that when you are seeing a lot of zeros, it usually happens because of such kind of things. Usually happens because of a stop hunting, or at times when the day low is broken or a day high is broken, you might be seeing a lot of zeros getting generated over there. It's one of the momentum exhaustion pattern where such kind of low liquidity zones, price usually comes and fills those zones very often. Not every time, but most of the time. A very good auction will not happen like this, right? A very good auction will be, it creates zeros, immediately it fills. Or even if you're seeing a lot of zeros there, price often goes and fills the zones here. If you observe very carefully on day-to-day basis, you will be notice that there won't be not much of a zero zones over there. And wherever the zero zones are there, usually it gets filled. I'm talking about a block of zero zones. I'm talking about a block of zero zones. I'm not talking about 1 zeros or 2 zeros here and there. But I'm not talking about these 2 zeros here. It may fill or it may not fill, right? So I'm talking about a bunch of zeros, bunch of low liquid areas. Those zones often gets a revisit from an intraday perspective.
Rajendran,
Yes.
if you observe the 1440 sell side, we have a lot of zeros there. 1440 candle, 240 candle.
Yes.
Yeah. Can we consider that also like this?
Yeah, that also like this. It's the same thing. Liquidity is not there. It's coming after 240. So maybe Monday we might get a clearance. If at all it's not cleared in the zone, maybe it might get a fill by Monday. So it's happening in the late of the session. Another 45 minutes is there, right? So and price is pushing up, and momentum sellers. This talks about momentum buying, right? Momentum buyers are really pushing the market up, but still that is a low liquid zones. Price usually have a tendency to revisit at that level. It's happening lately in the market. If it is happening during the middle of the day, you can find that as an price used to come and revisit those zones very often.
Okay.
So what if such kind of activity happens after 3 o'clock or 3:45? We can't do anything. We are very late to the session there. You can see, but most of the places you can see these kinds of zeros doesn't has any meaning. So there is a zero here. There is no momentum. There is no momentum here. Just there is no liquidity there. There is no liquidity here. It doesn't has any meaning to that. It's not a momentum selling. It is not a momentum buying also. It is not a zero liquidity. Just a zero liquidity zones. It doesn't has any meaning because simply the buyers or sellers are missing. It's not there. So it's not a reference at all to me, right? Okay. So next comes the very interesting setup. So zero between momentum imbalance. More the momentum is going to generate. When I say more the momentum, I say I'm talking about volume. Heavy volume. Then stuffed zeros between the momentum imbalance bars acts like a strong resistance or support. That is the reason we are taking 10 times here. We are taking 10 times of volume, and all the blocks are getting filled with the thick numbers, let's say 100, 250, and then 700. You know which is a bigger number when you start interpreting the order flow charts. You know what is the relative volume which is happening at every 5-minute once interval. So when such kind of volumes are happening and more than 10 times activity is happening compared to the other side, and you're seeing at the parallel, you're seeing an zero between those momentum imbalance, then that acts like a strong resistance or a support zones. So third comes the zero liquidity zone. Zero liquidity zones. We call that as an exhaustion high or exhaustion lows. So usually it's such zero liquidity zones are results of stop hunting or stops getting hit. So it creates a lot of zero zones either on the buy side or on the sell side. Usually such exhaustion high or lows gets revisited. But if it happens on the late session of the day, then one can ignore it. You can simply ignore it or carry those information to next day. Okay, that's what one can do here. You simply ignore it for the day and carry those information for the very next day. Ignore the information for current day, not R, and carry those information to next day. So that's one more interesting zone. The next comes the unfinished auction or unfinished business. It's kind of an what is unfinished auction or unfinished business? It is a poorly facilitated trading zone. It's a poorly facilitated trading zone where the candles edges, candle edges. When I say candle edges, say I'm meaning top left edge and the bottom right edge are likely to have values, like to have some trading activity, which is a poorly facilitated trade. Okay, if it is good facilitation of trade, then usually it will be usually order flow will be filled with zeros. Order flow will be filled with zeros, right? So instead of zeros, if you're seeing values, then it means unfinished auction. And unfinished auction, so what is unfinished auction? Usually fills up faster, and again usually fills up faster on the same day. Most likely it fills same on the same day. But if you are seeing unfinished auction, you call this an UAL or UAH, unfinished auction low or unfinished auction high, during or post 2:30 p.m. when it comes to Indian markets, then such information has to be carried for next trading day. Right? So again, next trading day we can expect a clearance. So far in the January series, whatever the unfinished business came, almost every unfinished business got a clear on the same day, or whichever came on 2:30, it got cleared on the very next day itself. Right? So next trading day, the expectation is always of such levels is a revisit in a very, very short term. In a very, very short term, such levels are most likely to get revisited. And last month, it completely revisited, no matter what, wherever the price are. Even there are places where the unfinished auction got created and price shooted up 100 points from there, but eventually price came and revisited to those levels. Right? So at times it gives you exponential odds if there are we can call that as an exponential unfinished auction or an unfinished auction. So exponential unfinished auction, it is a result of emotional momentum trading. Right? Sometime back we got almost 4 unfinished business in a row, or 5 unfinished business in a row. Let me check where the charts are. Sometime back, yeah, it's here. So this is a chart here, one of the day, where there was a strong rally came in. It's a late rally, I think on 28th or 29th. And each and every day, you're getting in UAL levels. It may be in the next version of Bell TP onwards, you'll be able to see these levels. When you're seeing this kind of levels, 1, 2, and 3, and 4, this is usually happening around the close of the session. There was a late rally. When such kind of rallies are happening with an unfinished lows, the only thing you have to do is that wait for the next day to open. Don't go and jump into the bandwagon immediately. Wait for the next day to open. Usually it opens with a gap up. At times it could be a 50 points gap also. At times it could be a 25 points gap also. So wait for the next day to open. Let the market, once the market opens, you go and open your short immediately at the open itself. Right? So
You
those
can
are
zoom the chart.
Let me check if I can zoom it.
So unable to understand what's happening at the bottom of the candle.
You understand what is unfinished business, right?
I have a doubt on that, so that
You don't understand.
yeah,
We know your name,
Sampath.
Sampath. Okay. So unfinished business. Maybe if you might fail to understand this. So there are. If you look into the order flow, are you new to order flow by any chance?
Actually, I missed some sessions in between.
You missed some sessions in between. Okay. So okay, maybe I'll show you what is happening over here. So look into this example. Most of the unfinished auctions, a good auction will be having zeros on both the sides. See that any candle you take, you'll be seeing a zero on the top left and also the bottom right. You are going to see the zeros on both the sides, right? And you can see here the one is you can see in this case 88 is there. So that information I'm going to carry forward. It is an unfinished auction. So what I'll do is that I will draw that level. So it's an unfinished auction level. You see that 88? That's something weird here. That zeros here I'm seeing a 0. Here I'm seeing one more unfinished auction, 26. You're getting my point? So I'm getting a 2 unfinished auction levels there, and it is happening after the market hours. So those levels will be getting filled on Monday. Monday you can expect a fill or a gap down. We usually our price opens around 10,885 or somewhere lower. We consider that those levels got a clear. So I'm seeing one unfinished auction here and second unfinished auction here. Those levels are still not revisited. And if I go back and check, are there any other unfinished auctions? So you can see there are a 0 fill here, which is really good. Any other places we got? Not. You see most of the places, both the top and bottom are clearly filled. Even at this low also it got clearly filled. All the lows got clearly filled, but it ended up with an unfinished auction. Means even if the price opens gap up, we can expect the price to revisit this level. This level most likely it get filled on Monday at the opening itself, most likely within a couple of minutes. Once from
sir, if it is reverse, sir, left to right, we have seen top, left and bottom right.
Yeah, top left and bottom right. That's it.
If top left has unfinished business, that also we are going to consider, right, sir?
Yes, that also we'll consider it.
Okay.
That also we consider it, and it doesn't matter. I also checked with whether it is global data feed or e-signal. The thing remains the same. Unfinished business are getting cleared. So last month we checked with global data feeds. All the unfinished business, wherever it came, it got a clear. Right. So, but there are no unfinished business.
And sir, this will happen in trend day also, sir. We can consider this also in trend day.
Any day, any trading day, will consider that. Most of the unfinished auction business has a very high odds of revisit there. Right. So, so we have. Let's observe how this thing goes. It ended up with a 2 unfinished business. So what I will usually draw is that I'll be drawing a rectangle saying that this is a unfinished business, and I'll say like this unfinished business level, which is still not revisited back, and this is also one more unfinished business. So we have 2 unfinished business levels there. Right, so which is not an emotional reaction, but just a little bit of an emotional reaction is there. It results due to the poorly auctioned trades. Right? The auction is not the auction is really happening fast. That is the reason it left such kind of levels there. And this case, the levels, whatever it's drawn, is from the new tool which we are experimenting. It's one of the day. We got this levels UAL. So all these levels are drawn automatically, and it is usually the result of such kind of values. It has some values here. It has some values when the price was auctioning fast. This rally was almost some faster rally. So even it started almost from 10,620 levels, 10,597 levels. From 10,597 levels, there was a 100-point rally comes in, and most of these rally happened in the last 15 minutes. This entire rally was happening in the 15 minutes. This from 10,620 it went to, you see that it's just, everything happened in the last half an hour. It's the last half an hour rally, and most of the rally happened in the last 15 minutes. So it is an emotional selling. If it is an emotional selling, I mean, in this case, it's an emotional buying. You're seeing a lot of emotional buying here. That is why the auction is not getting facilitated properly there, right? So usually what happens is that price come back, test all those levels, and most of the times it reverts back. So it clears all the levels. At the same time, it reverses back pretty faster, right? So the same kind of example happened one day before zila started, right? So that day we had seen a similar experience there, where there are multiple layers of unfinished auction. Price comes down. The very next day, it smashes and clears every reference level, and then it again rallied back. That kind of setup there. So I can show you what are the places we observed. So I mean, I'll show you how the reaction came on this particular day. So this is from the Nifty perspective. Let me go to Nifty 1 minute chart. Nifty. This is Nifty continuous futures, 1 minute time frame. Here, you see this rally here. This rally, this entire rally here, it's mostly because of that unfinished auction. So a lot of unfinished auction, unfinished auction, unfinished auction, unfinished auction, unfinished auction. Market comes up and it clears all those references. It left only one unfinished auction for that day, right? That auction. That also market lately, there was a rally. I thought like that unfinished business might not get clear, but we're expecting a short covering rally, but price clears those unfinished auction also. It is the last unfinished auction. It clears and then it took a final rally, right? So that's where the emotional players, you can identify all these are emotional, buyers. All those emotional buyers are most likely to be those, they are poorly, moreover they are poorly facilitated trades. So price mean reverts here to clear those trades, and finally at the same time, once they cleared all the unfinished business, they rallied higher, right? That's the thing you will be seeing most of the time, and it's a very complex pattern. You cannot without order flow tools, you cannot able to correlate what is happening over there, and with order flow tools you will be able to get a better perspective. So if you look into that particular day's commentary, right? So let me open that Jan 30th commentary. Let me go back and get you the commentary. D drive, Zoom, 30th. But we have to carry forward this information. Yeah. So let's start the day here. Let's see how was my reading was on that day, right? So based upon this information. Yeah, Rajendran here, joining from Bangalore, and welcome everyone to live training session on market profile and order flow. So you're able to hear my voice? Am I audible now?
Yes, sir.
Okay. So there is no follow through. Price opens at the edge of the day, and then still we are trading on the downside, which is still not a good sentiment. At least now it should be a kind of an open drive that is clearly missing. So confidence is what we're going to watch. We're going to watch the confidence at the reference line over here, right? So which is not a good sentiment. And yesterday's order flow, when the order flow came, it came up with a lot of unfinished business, an unfinished auction, we can say like that. You'll see a lot of unfinished auction. So 32 there, and that's an unfinished auction. Again 66 there. Again one more layer 1 here, and one more final at the day's low. right? So last half an hour, it's a lot of unfinished auction got created. It's kind of an emotional buying. But then looking now into the order flow for the day is meaningless. But we have to carry forward this information. What the information says is that all are emotional buyers, so whoever came, so maybe if there is no follow through, possibilities are there that all these levels could be taken down on the downside. So that is the information. But at the same time, today we are not going to look into order flow. If there is any big buyer or big seller, it doesn't make any sense because we are in the rollover process. But this information we're going to carry forward 1, 2, and 3, and 4. So there are four unfinished auction which came after 2:30. So it has to be naturally carried forward for the next day.
Sir, why we are not looking order flow, sir? What is low over ordering? Low over position?
A rollover.
What is that, sir?
A rollover is like most of the contracts will be shifting from current month to next month contracts. So most of them are
okay. Tomorrow expiry. That is the reason you are not looking.
Yes. So you most of the things will be like you will be seeing like a seller, but next contract it will be adding like a buyer. Right? So there is no point of looking into last 2 days of order flow. You may not get the true picture from the market here because it's mostly a rollover. Trading activity, rollover kick starts. I mean, most likely in the last 2 days it will be getting intensifying. But yesterday's levels we are carry forwarding. These 4 levels we are carry forwarding. So all these 4 levels are a strong indication that emotional buyers, especially when emotional buyers are there, create such kind of 4 or 5 unfinished business in a row or unfinished auction in a row. So these are automated reference level. Yesterday only I got this new tool. So most likely they will be start deploying to the clients from here on, I guess. So which is said yesterday's rally was good, but there is no continuation, and what you're seeing right now is possibly a mean reversion towards all those levels. Okay, so that particular day it ended up something like this. Maybe I'll show you how. And the like, yeah, got almost they took one of the reference level here around this time. Last time it came at the start of the series, so we are able to play on the downside. But this time it's really present. It's something different. So you can see that price was plunging down. T period has a lot of single prints, so all those single prints are having the odds of getting clearer. So that you keep it in your mind. That price could again get back to 10,670 levels. So again, price is dripping and dripping. It's not a high confidence mark. I mean, but from the order flow perspective, band, we may still look into. From the order flow perspective, all these reference levels got a clear in one shot. So almost 4 out of 4 levels, 3 levels got a clear. And this particular day, market was doing something like this. Like it, only one unfinished low was remaining on that day. So unfinished auction, but we are expecting some support to get a clear towards this level. All these single prints, it got a clear. And in fact, it came very close to that level. And again, it took that unfinished low, and then it started rallying from there straight away towards 10,000, 11,000 levels. Right. So that's how it has been. When you are seeing in layers of unfinished auction, it gets cleared immediately, but then it also gives you a counter trend rally. Right. So that's the indication that it's an immediate shot, but at the same time, you need to be alert to reverse your trades as well. Right. So these are the zones where I initiated trade, and when it cracks down here also, we initiated a long trade over here. Right. So we initiated a long trade over here, and when it breaks out of about this 11,700, also I initiated a long trade over here. So it gives you a tremendous odds in your thinking when such kind of unfinished auctions are coming in a faster manner. Right. And sometime back we also get similar unfinished auction, the same series, both in Nifty also, in Bank Nifty also, and it's on maybe from the 1 minute chart we'll be able to see that there was a fast downtrend followed by a fast uptrend, which is during here you see this rally here. I think this is the rally. When this rally was coming in, this late January 8 rally. The entire January rally came up with multiple tranches of unfinished reference level probably, and it was looking like some unfinished business at this level. It started from here, again here, some here, and here, and it was kind of like a tightly packed unfinished reference levels. And so what happened that particular day was the price opens gap up and it started sliding down. It went up, it clears all those unfinished business level, again it reverts back, and the same set of unfinished auction was there on Jan 9th as well. I mean, the Jan 8th we got a lot of unfinished auctions, and Jan 8th we got a clear, and also it rolled back up, and that's how it is. And one more time we had such kind of unfinished auction around similar crash and rally came, where the price was breaking multi-day low here. Look into this example here. Also, we seen, probably you can go and check back the study zones. One of the day it was breaking 2-day low. Okay, maybe I'm not able to check from these candlestick charts. Okay, anyways, but wherever the unfinished business are there, it usually have the odds of clearing faster, right? So time to time you can go and observe back on your charts how frequently it is coming and filling, how it is getting filled, and you try to take a note of it, right? So then that is where you'll be able to develop your own trading strategy on top of these information. You'll be able to understand how you can create a trading system on top of this, when you can anticipate it, right? So at times it creates, and in another 5 minutes or 10 minutes it gets cleared. That's not a trading strategy at all. But whenever the price is deviating away from the unfinished business levels, and then you're seeing some momentum exhaustion setup, then you can think about a low risk trading opportunity towards those as a target reference levels. Always unfinished business are target levels, but if there are 3 or 4 unfinished business levels getting created in a row, that is also one sign of a emotional buying or a emotional selling, right?
Rajendran, does it follow in for large cap stocks like Reliance, HDFC and all, where there's like high liquidity?
I haven't we haven't monitored much, but because it's very time consuming to look into those kinds of figures. So now once we got these levels, it will be easy for us to monitor. Last time I had seen in ICICI Bank, whatever the reference level it was there, it got cleared in the same day or next day itself. So I was just going through the ICICI charts. I was seeing a lot of reference levels, but all those reference level either cleared same day or the very next day it got cleared off. Right. So I mean, I'm not sure, but most of my observation with unfinished business is only with Nifty and Bank Nifty. With stocks, I never trade because I don't trade stocks intraday. My assumption is that it's still a poor auction, so high liquid instruments has to get cleared faster.
Yeah, understand. Thanks, sir. Yeah.
So we'll do one thing. We'll take a quick break here, and we'll get back. We'll get back around 11:35.
Sir, I have one question.
Yeah, please.
Sir, do we have 45-degree line yesterday?
No, it is not a 45-degree line. 45-degree line is something different.
Okay.
It's not 45-degree line. 45-degree line looks like a 45-degree line, but yesterday's session probably you're talking about from the market profile perspective, right?
Yes, sir.
So it's not a 45-degree line.
Sir, rally high, is it?
It is not. It is not a rally high also.
Okay.
Yeah, a rally high will be like price has to drop and then it lately recovers. This here price went up also, it went down also. In that case, we don't consider this as a rally high. It's not a rally high. It's not a rally high. It's not a 45-degree line.
Okay, sir.
Yeah. So again, we'll start the session by 11:35. Right? Until then, we can take a small break and come back. We'll discuss more about order flow strategies. Until then, I'll be on mute. Okay, I'm back here. So we talked about a couple of strategies, and we also discussed about the data feed differences. And we understand that it's not the data feed issue, it's not the software issue, it's the nature of the transmission from the exchange, what kind of the data is delivered. So usually if it's an uptick downtick data or a true bid and ask data. If it's a true bid and ask data, you will get the real actual buyers and sellers. Whereas if it's an uptick or downtick data, it's quite 97% accurate that it's closely 97% accurate. Whatever the exchange is transmitting, those bid and ask data will be transmitted, but they are not the real bid and ask data. Probably they are consolidated bid and ask data, right? So it usually the data is processed at frequent intervals. Global data feed processed at 1 second interval, and probably e-signal processed at 4 millisecond levels. Means e-signal provides more tick data compared to global data feeds. So maybe the e-signal data will be a bit more accurate compared to global data feeds, but then ideally it doesn't matters. Usually it matters only at day high or a day low, where you're going to see some big buyers or sellers, whereas that guy global data feed might show as a big buyer, whereas e-signal might show as a big seller. But in reality, nobody knows whether it's a big buyer or a big seller, because both of them are not real bid and ask data. Both of vendors, global data feed and e-signal, they rely on the consolidated snapshot feed sent from the exchange. Exchange itself never transmits real bid and ask information to the data vendors. As of now, exchange is doing for the tick by tick. Indian exchange is doing tick by tick data for the HFT vendor. So HFT gets the actual bid and ask information, which is very let's say the HFT transmits at millisecond level. So maybe within a millisecond, even maybe 100 trades would have been happening at a millisecond levels. 100 trades or even 1,000 trades would have been happened. Whereas global data feed will show us an one tick, whereas e-signal might show it as a 2 ticks because they process at 450 milliseconds. But in reality, it could have been 10 trades or 20 trades. So we cannot really understand that whether it's an actual buyer or a seller. But the global data feed and e-signal uses uptick downtick methodology. Probably I'm assuming that they're using uptick downtick methodology to understand whether it is a bid or ask information, or maybe exchange itself uses those uptick downtick data to transmit as a bid or ask level, right? So what I think is that either the bid ask, the uptick downtick method should be used by the exchange to transmit the bid and ask quotes, and the data vendor receives it and then they show it as the way they represent the data. Or maybe exchange sends trading information, maybe based upon the uptick downtick method, either global data feeds or e-signals. The data vendor might be processing those information, they might be reconstructing those information, and they are retransmitting to us. So basically, it's not the problem from the exchange, it's not the problem from the software, it's not the problem from the data feed. It's usually the nature of the transmission or the type of the data it is being transferred. Because of that, we might get a different information there. Otherwise, closely it is 97% accurate, 96 to 97% accurate. Out of which is more accurate, either global data feeds or e-signal. Definitely e-signal is more accurate because they are processing at they're processing at 450 millisecond level, right? So they might be a bit accurate. If global data feed is accurate 97% of the time, e-signal will be accurate 98% of the time. But in reality, nobody knows if it's a big buyer or a big seller at the day's high or at the day's low. That's the key thing here. And
Rajendran, yeah, hello, can you hear me?
yes.
Yeah, so the data we see, like the order flow which you're showing right now.
Yes.
So this is from a global data feed. What data source?
This is from e-signal. Maybe I'll show you from global data feed also. So I'm going to connect to my global data feed. So simultaneously, you can connect two different data feed as well. So continue. Yeah. So let me open Nifty-I is the symbol name. Nifty-I. So I'll duplicate here, duplicate in a new tab. This data is getting loaded from eSignal, whereas if I select a different symbol, it will get loaded. So once it gets loaded, I'm going to select Nifty-I. Nifty-I. This will load from the global data feeds. Or maybe I have to shut down eSignal.
So, Rajan, it's not important to look at, in my view, if you think that.
Just give me
Yeah.
last time I had some issues with Nifty future contracts with VDFL. Okay, this is Bank Nifty. Bank Nifty is loading good. Still, I think every time I restart the machine, Nifty works good, and then sometimes I need to delete the symbols and then I have to recreate it. But from this, let's try out load. Maybe we can compare Bank Nifty to Bank Nifty. Okay, so Bank Nifty order flow charts. This is from global data feeds. Most of the Indian vendors, they provide tick level information only for 2 to 3 trading days. So you need to have those information along with you. Whereas eSignal provides up to 15 days of tick level information. So that's a quite long time to study if at all you are really serious about order flow. And there are one more additional features there. If you pay another $15, they provide up to 45 days of intraday tick level information to your screen. So maximum you can receive up to 45 trading days, which is a fair decent information to backtest or to check, to validate, but that comes at a bigger price, right? So and with global data feeds or True Data or any other Indian vendors, they provide up to 2 days of tick level information, mostly because of the internet bandwidth pricing. It's not affordable for them to give at a bigger pricing. We're also checking with vendors to provide up to at least 7 days or 10 days with an additional cost. So we're just still working on those information. So this is from global data feeds, right? So the tick size is 1 point TPO. The brick size used is 1 point, and I'll go to February. I'm missing something here. 27,300. That's the closing. Okay, this information is not filled properly, or what? What was the Bank Nifty closing? Bank Nifty
Around 27,200 something.
27,126. Is this right? 27,126, right?
Maybe average rate maybe.
No. This is not average rate. Maybe this is a different day I'm looking into it. At 31st Jan, I think after 31st Jan, I haven't uploaded at all. Means I haven't connected to the data feeder. Yeah. Connect to the data feed. Maybe right click and reload all historical data. Or maybe because of 2 data feeds are getting connected, it's not backfilling properly. Either I have to use eSignal or I have to use global data feeds. First, it might try to check whether it's an e-signal symbol. If it's not loading an e-signal, it might try to do it in global data feeds. That's why it's taking more time. Maybe I'll try to shut down my e-signal here. Okay, let's not experiment now. Let's go with the flow. Right, so one of the days information is not loaded, but maybe I have to close e-signal and I have to try out. Maybe if I check e-signal, it might try to check those symbols here. So let's not waste much of time here. Maybe I'll try to do a different video, like comparing side by side Nifty data and global data feed data and e-signal data. And then that's the reason I took e-signal, just to produce and just to compare what is the differences you might get if there is a big buyer, how it will see as a big seller. I just want to show that it's not difference between it's not the difference from the it's not because of the data feed, it's not because of the information, it's because of the nature of the transmission. Anyways, we'll do a short video on that. Probably I thought of putting it in the public domain. So that's the reason I took e-signal. Otherwise, I don't have any reason to use e-signal. I'm going to use global data feed. And okay, for time being, I'll skip GDFL here. And let's use this information. So we are talking about a couple of strategies, right? So a couple of strategies. We talked about exponential unfinished auction. It is a result of an emotional momentum trading where 3 or more than 3 unfinished business unfinished auction levels got generated due to late rally or late sell-off. So next day, it is usually expected to clear most of those unfinished references. Okay, unfinished auction references. So that's strategy number 5. And strategy number 6 is one of my favorite strategy: momentum auction reversal. Right? So the strategy is is something related to strategy is related to absorption or an responsive action. I'm sorry, it's not absorption, it's related to initiative drive. So initiative drive is a core fundamental principle. We'll talk about what is an initiative drive, and there are a lot of initiative drive based strategies also there. It's related to initiative drive. It is a V-shaped reversal. It's a V-shaped reversal, and usually one can play with very tight stops. When it comes to Nifty, one can play with 6 to 10 points. Nifty, 6 to 10 points of stops. When it comes to Bank Nifty, anywhere between 15 to 20 points of stops. One can play this kind of games, and it is applicable to stocks as well. I'd seen a couple of examples on stocks, and S Bank is one. S Bank I'd seen, ICICI Bank I'd seen this series. So both of them had given a potential auction reversal from a scalping perspective. It has a very higher risk reward ratio. The risk reward ratio can go anywhere from 1:5 or 1:10 or even 1:20 or at times 1:100 also, right? So most of the momentum auction reversal could be days high or days low, right? But it is a scalping opportunity. It's a scalping opportunity. You're done. You have to move out of the game. It is a scalping opportunity, right? It's difficult to explain in what momentum auction reversal is, but then I can take the budget days video. I guess many people missed the budget days video, but still, I just get those videos here. I'll show you how we identify momentum auction reversal, what kind of risk reward ratio it had provided. So yesterday, 1 o'clock, when the budget almost finished around 1 o'clock, and almost media channels started speaking. By that time, so this is around 1 o'clock. Now the long stops has been got a hit there. At the same time, it's not long stop, it's a short stop. I'm sorry, I had such kind of bad comments. It's a short, most of the shots in the late afternoon, right? So it got triggered. As I said, many people have a potential. They used to keep a stop loss at round numbers, 11,000 levels. 11,000 is a round number, right? So even though we had a back-to-back, we talked about back-to-back secure high. We said like there is a one possibility that 11,000 could be triggered to take those emotional levels. Many times you might see that price often goes to that such kind of reference level, and playing around those reference level, it's not very easy. So at times those 11,000 levels might be getting hit again and again and again. But it happened on the event day. On the event day, that psychological reference level 11,000 got triggered. This is post budget. When the budget is about to over, we got a late rally. Budget was about to over. I don't know, the budget talk was about to over. We got a late rally, and once the budget ends, it comes down again. It took one more rally. By that time, it hunted. It went till 11,020 levels, and the price started hovering around 11,003. Right. So on this, I'm going to talk about two strategies. One of the strategy I'm talking about, it's a combination of two strategies anyways. But one of the strategy is a momentum auction reversal. I want to play the video here. Point of control is over here. So point of control is around 10,900 levels. Right. So most of the days, these kinds of days where the two-way auction process usually happens, and so far the auction is still on the long side, but still sound okay. I'm gonna pause the session here. What I want to say here is that if you listen to the yesterday's morning commentary, we talked about the scenario something like this. So where we expected 11,000 to be taken out and then spike down, again come back to the center. That's what we talked about it. Right? This is what usually it happens during the movement. First, mostly it will be like this, and you'll be seeing some spikes, and then you'll be seeing one more spike. This will be the final spike, and price closes at the center. Nobody gets any clues about that particular day, right? So that's how we talked about it. And I'll continue the video again here. The risky, and maybe one of the place where one can place a remainder of 50% of the shots here as well. So fast forward, say that correction. So far, price is trading down below that. We looked above so far, and the price is trading down below. That's the 10,000. 11,003 is the reference we will need to watch out for. There is some momentum exhaustion happened over here. That's on a 5-minute time frame. And again, a correction, that's a 1-minute time frame. More the time, if you're going to see price going to spend down below 11,003 levels, which is not a good sign of a continuation, right? And when it comes to buying Nifty, what are the odds which is happening down there? We're not going to look into any of the stocks, so the full focus is only on Nifty and Bank Nifty. Two-way auction process happened, and then it spiked up, right? So that's the game so far. And it's a multi-day breakout as well, multi-day breakout and the previous month breakout. And as I said, most of the multi-day breakout, if it is not seeing continuation, if there are, they're mostly fake outs, right? So most of the multi-day breakouts are traps, unless the confidence is not showing at that time. When its price is breaking multi-day breakout, it has to show immediate confidence. Confidence has to continue. If it is not continuing, that itself a sign that we are dealing with a weaker hands, right? So that's a sign of a continuation. That's a good sign. But if that sign is still missing, then that's still considered as a weaker hand buying. Usually price point of control acts like a magnet. I'm going to pass the session here. Again, you see that price is trading above value area high. Mostly emotional traders come for the buying there. Mostly momentum traders look for the breakouts. But breakouts are not successful 60% of the time, right? So only breakouts are successful only 40% of the time. And the event day like this, most of the event day like this, most of the breakouts are going to fail, especially on an event day when it's a multi-day breakout. Most of the multi-day breakouts on an event day is a fake out, right? So, and that is where you need to measure reference at a key reference level. The key reference level, what I am watching there was 11,003 levels, because it is the previous swing high. Right? Anyways, I'm going to talk more on that in the later part of the session. Now let me continue the video here. And you can see here the point of control is almost 7 point wide. Here is the point of control here. And price is completely deviated from the point of control, which gives you potential odds towards a mean reversion game by that time. But how we can confirm from the order flow what kind of pattern happened in the order flow, that's what we're going to study here. So let me run the video here. From the order flow perspective, so far buyers. Cumulative delta is also buyers, which is not a good sign. Even if the cumulative delta closing positive also, it's not a good sign usually when there is any strong trend is evolving. So we may be at the upper extreme again. And if you look into the open interest data point, which you usually look into during end of the day, but if you look into the open interest also at this juncture, the open interest is still 11,000 is still holding up. It's still competing with 11,700 levels, and still the PCR is roughly around less than 0.5 or 0.45 levels. At the end of the day, we need to check if this 0.45 declines to 0.4. Again, the 11,000 levels could be defended very strongly. And it's a kind of a momentum auction reversal. You can see that it's a momentum auction reversal, right? You see that big volume, high volatility candle, and then a negative candle. So probably this could be one place one can think about initiating a long with a stop here. It's a correction again. It's a short signal. Tight zone. Yeah, it's a short signal there with a stop at around. So it's a 3-point stop or 4-point stop where you can get over there. Even if you missed it, still you can get it. Was closely how many points? 35, 40, closely 40 points range, right? Okay, so here is the momentum auction reversal setup. I just passed the video. Now I'm just explaining what is a momentum auction reversal. Right, so momentum auction reversal is a very high volatile candle. So you think about this range of the candle. The range of the candle. When I say range, I'm talking about the high and low of the candle. The high and low, high minus low of the candle is more than 35 points. It's a very decent range from a 5-minute candle perspective. Within 5 minutes, it moved 20 points or 35 points, which is a big deal, which doesn't happen all the time in Nifty, right? So you're seeing a very long candle. The range is really high. And I'm not talking about the body of the candle. Body of the candle also good, and the range is also good. And in fact, you are seeing a lot of momentum buyers. You can see that 10 here, 314 there, 111 there. In fact, 2145 levels here. So it's 2145 levels, and 242 and 269, and high at the day high it's 63. All are momentum buyers. The momentum buyers are pushing the market up. That we call that as an initiative auction. It's an initiative drive, right? So that's why we call it as an initiative drive. And big candle, volume also really big. Almost 12,926 contracts got traded in one candle, which is significantly big. I never seen throughout the series, I never seen 12,000 lots got traded in a 5-minute candle, right? So usually, if you look into the order flow, usually the order flow at the day high and the day first half an hour or first 15 minutes and last 15 minutes, we will see some big volume, more than 4,000 lots or 6,000 lots or at times 8,000 lots. Or if it is even day, you can see some at the opening itself, you will see some 10,000 lots could get traded. When there are events, you could see it goes to 10,000 lots or 15,000 lots at the open. But during middle of the day, 12,000 lots coming, it's something really a big volume, a big volatile candle. Buyers are definitely at control at that level. Next one is what? So we are at the day high. More interestingly, we are at the day high. So momentum reversals has to be measured only at the day high or at the day's low. Right? It can be practiced on any time frame, but from an intraday perspective, it's good to play with a 3-minute time frame or a 5-minute time frame. I prefer to use 5-minute time frame for momentum auction reversals. But the same thing you can practice on a 3-minute time frame also, right? So which is the best time frame? There is nothing like which is the best time frame, either 3 or 5. It doesn't matter. The risk reward which it gives is tremendous. It gives you a very tight risk. So once you've seen this big positive candle, the second thing what you have to see is a negative inside bar candle. Negative inside bar candle. And the third thing what you have to look into is that the big volume which came in should also comes with a bigger delta. So that's again another key. So here is the delta candle. This delta candle talks about how bigger the delta is. The delta was 3,424 positive number. That means 3,424 more buyers are there compared to the aggressive sellers. So there are 3 things we will evaluate. One is the big volatile range. That is the first thing. The first thing is big volatile range. And the second thing is the bigger volume. That is the second thing. And third information is the bigger delta here. That is what we observed in the current candle. The second candle, what we'll be looking here is that's the fourth point. I would say that it should be an inside bar and it should be a negative bar. It should be a negative bar, and the body should be relatively small. The body should not too much big or not. It should not be too much big compared to the previous candle. But it should be an inside bar. Body should be very small here. Whereas the body, if you look into the body of the candle, it is very big. So that's the sign that this momentum, it could be one place where you can expect a momentum auction reversal, where an initiative drive on the upside. I'll put this as an initiative ID up, initiative drive up, followed by a initiative drive down, initiative drive down, and that drive down we can anticipate, right? So that initiative drive down we can anticipate. So this is the pattern setup where you can find most of the initiative to initiative V-shape reversals, right? So at times it gives you only scalping opportunity towards VWAP level. At times it could be the potential day stop where it could be a complete turnaround towards the other side of the day. Completely whatever the gains it has been gained, completely it could have been washed out, right? So now I'll run the video here. Now you can see that price is trading around the stop loss was around 10,024 levels, and price came very close to 10,019. That is approximately an 5-point stops or and even if you could be able to get a 6 point or a 7 point stop, still it is a 6 point or 7 point. It's still a tight stop loss. Even if you're able to make it as a 10 point in Nifty, also it is a kind of a very, very tight stop loss with a greater odds, right? So let me play this video again here. It's a very tight stop where one can think about initiating an intraday trades here. Again, let me pause the video here. If you look again, the sellers are not showing up immediately. You see that all are white in this zone, all are white in the zone. So there are no stack sellers. The stack sellers, where they're emerging, that matters here. So our objective is to see that we should see when I'm seeing a momentum initiative drive. So when I'm seeing an initiative drive, I'm going to see a lot of momentum here. There is a buyer momentum here. Again, there is a stacked buyer momentum here, and stacked momentum, buyer momentum in this zone. So when I'm seeing a V-shaped reversal, I should start seeing that momentum sellers should start arriving there, and they should take a V-shaped reversal. Right? That V-shaped reversal is the key here. And let me continue the video again. And VWAP level comes around. So VWAP level comes around there. 10,940 levels. That is closely an 80 point correction. Sellers are likely to take control. Let's see. Some momentum sellers are there, but it's still not stack sellers. And now you can see that some momentum sellers are arriving. A lot of zeros. What we're discussing here was kind of a 4 to 5 point stops there. So let me pause here. Now we can see there are a lot of zeros coming. Its price is going down with the low liquidity. A lot of momentum sellers are showing up. That's good, but at the same time, all these zeros has an odds of getting a fill there. So most of the zeros got filled. Again, it's filling again some more zeros. See, if you watch price alone, it might give you a misleading information. Again, trading below January low, above January low, again below January low, again above January low. A lot of pictures around there. Bit of correction, that's January high. More people will be having the habit of keeping a stop loss around 11,000 levels, right? So around reference level, most of the shorts would have been having the stops there. So stops would have been on stops on the longs would have been shorts would have been hunted. Maybe now they might reverse to hunt the stops on the downside completely. Maybe testing the day low. As I said, at times momentum auction reversals are signs of days low. I mean, momentum auction reversals could be, in this case, today's case, it could be day high.
So, sir, like, can we go for a short sub?
What I'm saying now.
Sorry, sir. Okay, sir. Sorry, sir. Sorry.
No, what I'm saying is that I'm saying short only. I'm talking about that only.
No, I was not there. I was just like, I was on a phone call. I was not listening to you properly. That's why I said sorry.
Okay. So I'm going to pass here. Again, I'm going to show you that this is the first place where we are witnessing a momentum sellers. That is the very first sign that this momentum auction reversal is going to stay. Very first clue that we are going to see a V-shaped reversal at this point of time, right? So I'm going to play the video here. Maybe I'll fast forward.
And up to what?
Because it took a long time to clear, almost more than 45 minutes to come to the VWAP levels. So Bank Nifty, Bank Nifty. So you can see there are low volume, price is dropping, and you can see quickly it fills up. That's how the liquidity fills. In between 1 or 2 zeros, it's fine. But when you're seeing more or 5 or 6 zeros, slowly it's coming in. It immediately fills in. There are no unfinished business. So far, things are clear, both on the upside and the downside. I'm just doing a fast forward. Still, there are no momentum sellers. Initially, momentum sellers showed up. That was a weekly high. And the reward was somewhere around 80 points down, right? So it moved from 10,020 levels down to 11,020 levels to down to 10,940 levels, and still, if you look from the profile, that's closely an 80 point or even 70 to 80 point of trading opportunity with a tight stop of 6 to 10 point range, right? So kind of a 1:6 or 1:7 kind of risk reward ratio, you can call it. And Bank Nifty, it's nearing its day low, which is most likely to happen in Nifty as well. So here we go. I'm moving in a tight, low liquidity range. Simply buyers are not there, right? So that's the game. Price is falling down not because of sellers. Buyers are not there. And there we go. I think point of control has been tested. No, not yet. Still pretty long way to go. 10,900 is the level. But Bank Nifty, context is. Let me fast forward again. So zila. So Bank Nifty tested day low. It's good. Bank Nifty is a day low. So we should not miss out where the value area is developing. That's the maximum thing we look out for, right? So, but that is not a value area is never a trading rule. So price mean reverse towards the point of control. As I said, point of control acts like a magnet. Let me fast forward again. Almost it done the day low. Some stops has been hunted. At least today, the activity was slow and steady. Most of the days, the upside crash will be pretty higher, faster, and the downside also pretty faster. It doesn't use much of a trading opportunity to look for any kind of setups. So almost it's done the day low also. They got back into the previous day's range. Day low has been broken. Day high also broken. Now only sellers are rolling down. Initially it was low volume selling, and now the sellers, more and more momentum sellers are coming in, pushing it down. Maybe the one who went long would have been covering out their positions down. Right, so this is closely an 160 point opportunity from the day's peak, right? So one of the places, one of the one of these kinds of trading low risk, high reward opportunity comes very, very rarely, right? So one thing is that you have to recognize that you are in such kind of game. And how do you know that? Only you will be able to know such kind of games only if you have a constant screen time. Now, how will you know how to trade such kind of events? How these kinds of momentum auction reversal happens? What if the momentum auction reversal happens when there is a multi-day breakout? What kind of odds a market could provide? What kind of odds a market could provide when it is coming on an event day, right? So based on that, you'll be able to spot low risk, high reward trades. You're not going to get the same momentum auction reversal trades every time. You are going to get only on such kind of event days. You're going to get only if there is a multi-day breakout and you're seeing in momentum auction reversal coming in, and where there are all the emotions which came in are going to get faded out, right? Otherwise, not every momentum auction reversals you're going to get 160 points. Not every momentum auction reversals you're going to get some 100 points. Context has to suit that. Surrounding factors has to suit that. And moreover, if there are even kind of days, you're going to get bigger returns. When it's not an even day, probably you're going to get some 30, 40 points and you're going to out of the game. Or at times it could be 20 points. The mean rewards to VWAP, VWAP is at 20 point levels, and you're going to take a 20 points profits. And on even days, it could be some 40 points or 60 points or 80 points or something like this. It could be even end up with 160 points gain. So ultimately, to trade momentum auction reversals, all it needs is a screen time. You can make your fortune from trading momentum auction reversal alone, but psychologically, it's tough to play at those levels. When price is breaking 11,000 levels, price is breaking previous swing high, and you're watching a momentum auction reversal levels. If you don't know what is the context which is going on, you may be exiting at 20-point level or a 30-point level, right? But if you know what is the context there, you have the guts to ride the entire downtrend. That is the belief system. You will be gaining the belief system only if you're going through multiple iterations of momentum auction reversal level. You will have a fair understanding how to initiate a trade and how long to wait. Should I have to initiate immediately or should I have to wait? Should I have to, what kind of confirmation I have to look out for? What kind of volume I have to look out for? And differs to script, right? So whereas for Nifty or Bank Nifty, we are expecting for the very high volatile candle, we will be expecting somewhere above 3,000 levels. Anything above 3,000, it's with a high volatile range, it's a qualified scenario. And for an inside bar, anything above 1,500, again, it is a qualified scenario. That value differs script to script. So you need to go and check each and every symbol. What is the relative volume I have to measure there? What kind of volatile range it should be there? In case of Nifty, I can say like anything about 20 points or 35 points or 40 points, I consider as a high volume candle. And likewise, you should be able to bifurcate. Then the reward what the market gives is tremendous, right? So maybe we are thinking about building a scanners on top of momentum auction reversals. We are already working on that. We are already working on the mathematical logic, because it's tough to instruct what is a range, a high volatile candle, right? So we are significantly working on this part to automate it. I believe we are pretty close to that. So we're still looking into different types of momentum auction reversals. That kind of screen time is going on, and that might take some time to come up with solid results. Maybe another 3 months from down the lane, we might get some beautiful momentum auction reversal signals also. So we are still working on fine-tuning those information, which momentum auction reversals are weak, which momentum auction reversals are strong, and how one can spot it. What is the context behind that? We are working on that seriously there. And so as of now, this is the context. Like momentum auction reversals, it's a tight stop. It stops are gone. You're gone. Even by a tick, it has been stopped out. You should be out of the game. You should not ask any question. Without asking any question, you should be out of the game, right? That's how the scalper behaves, right? So some people will think like 3-point stop loss hits. Oh my God, let me see what is going to happen. You should not have that kind of gut feeling, right? So maybe your gut feeling might say something. Your rule, you're going to play the rule. The rule says no, you should step out of the game. The rule says yes, you should be in the game. You punch order and wait for your stop loss to get a hit. Not getting a hit, wait for your target to hit. Target hits, move out of the game again. Right? That's how we have to play momentum auction reversals here. And yes, at times it gives you tremendous opportunity, and at times it gives you, especially when it's going to have when the breakouts are coming with a multi-day breakout, you're gonna get such kind of bigger opportunity there. And especially if it's going to come up with on the event days, you're going to see such kind of big opportunity there, especially when the markets are opening gap down, and at the gap down itself there will be a momentum auction reversal. You're going to see some bigger opportunity there again. So momentum auction reversals coming up with emotions, definitely it has a tremendous value. Or a momentum middle of the day market crashes, and then it shows a momentum auction reversal. Again, there is also significant opportunity, but those opportunities are with some 30-40 points, not like something like 160 points or 100 points. Those kinds of opportunities are very rare, but when it's coming in, you have one of the tightest risk management in the world. I would say that one of the best strategies from a scalping perspective. All you have to do is that you have to wait for such kind of opportunities to trade. You can make a fortune only by playing momentum auction reversals, right? And it's a high risk reward ratio game, but there's a lot of wait period is involved. You never know when the momentum auction reversal is going to come, but when it's showing up, you should be fast at with your fingers, and you should be reacting to those opportunities immediately, right? And at the same time, when the execution is going wrong, you should be exiting faster. At the same time, when your stop is done, you just get out of the positions. The best way to play is with cover orders and bracket orders are the best tool to initiate your intraday trades there. So you set your targets also, you set your stop loss also, and you forget it. Or if you want to ride the complete trend, you go with cover orders, where you place a stop, initiate the trade, and forget let it go wherever it takes, right? That is another way of playing with bracket orders and cover orders. Any questions on momentum auction reversal? So far in January series alone, we would have been spotted at least 8 to 10 opportunities in combiningly both Nifty and Bank Nifty. And yesterday's Bank Nifty is also a momentum auction reversal, by the way, right? So maybe we haven't looked into it closely, but we were studying Nifty mostly. But Bank Nifty is also momentum reversal yesterday. It also given an opportunity of some 15 to 20 point stop loss. And the downside, it went almost 300 to 400 points on the downside from the day's high. And I think more than that, I would say that. Maybe some 500 points correction yesterday from the day high. Okay, so that's with momentum auction reversals. Any questions? I can answer those questions.
Sir, there are some zeros on that momentum action auction reversal candle. Will it revisit again there now?
No, not necessarily. So those zero zones are intraday zones. If not cleared, just forget that. If it's happening lately, yes, you can carry forward. If it is happening during the morning or middle of the day, it doesn't matter. Let's say it is happening around 3 o'clock, or if it is happening around 3:30, then you can carry forward those information and you can check whether it is getting filled or not.
Okay.
Right? But if it is happening in the morning and it's not filled, just move on.
Okay.
Okay, next, the other strategy which we are going to discuss is it's the same topic. I'm going to use that, but it's a which we haven't discussed yet. It's a failed swing breakouts. So the swing can be the swing breakouts can be either intraday swing, or positional swings, right? So two kinds of swings we can talk about it. One is an intraday swing or a positional swing. The example which I'm going to quote right now is from the intraday swing. So let me go to a 1 minute time frame chart of Nifty, and let's go and check the past swing high. The past swing high comes around 11,003 levels. That's what the past swing high. So here is the past swing high, right? So look about how many times price was spending over there. I'm going to zoom that location. This is a 1 minute time frame chart. Probably if you're watching a 5 minute time frame chart, it will be looking something like this. Right. So let's try to understand what happened. Inside that we had a momentum auction reversal also, but not necessarily every time it has to come up with a momentum auction reversal. Momentum auction reversal is one place where you can anticipate a potential reversal zone. But most of such locations, what generally happens is that when the price was shooting up, you're going to see a lot of absorption here. All these things will be absorbed by the sellers. And again, more and more absorption. You'll be seeing an absorption here. You'll be seeing an absorption here. Every time the price moves up, you'll be seeing some kind of sort of an activity. All these activity will be absorption. All those buying activity, momentum buying activity, will be absorbed by the sellers. And lately, when they are pushing the price down, you see that this candle is where the initiative drive happens. The initiative drive happens with a lot of momentum selling activity, and that is the starting point that you can enter those points. You can enter at those points. So in our case, we entered here because of the momentum auction reversal. Even if there is no momentum auction reversal there, even if this candle is not a momentum auction reversal, you can still go with this candle. This candle is where the initiative drive happen at a key reference level. One of the key reference level which we monitor is 11,003 levels. That is where the initiative drive is happening. So this is where the initiative drive is happening at the key reference level. So as I said, whenever the key reference level initiative drive is happening at a key reference level, it is a potential reversal zone. You initiate a trade there and continue monitoring your position. Even if you missed in this candle, it's still an opportunity to initiate your trade over here, and either here or the close of the candle, you can initiate and monitor your trades there. From the order flow perspective, if you watch this big red candle, right, it could be looking something like this. It comes around what time? 115 candle it is. 120 candle it is. So let me go to the order flow and I'll show you. Nifty February contract. This Nifty February contract 159. 119. So here is the initiative drive candle. You can see that momentum sellers are coming in. Momentum sellers are coming at key reference level. That is then. So here is your stops based upon the momentum auction reversal. So this is a momentum auction reversal here. So this is momentum auction reversal stop. So that's a stop loss level as well. And at the same time, here you're seeing 11,003 is a key reference level, right? So 11,003 is a key reference level. Why is a key reference level? Because it is a previous swing high, right? 11,003 is a previous swing high. And at the same time, you're seeing a lot of momentum getting generated. So look into those contexts having a couple of zeros. Those zeros I'm not expecting a fill because momentum is initiating at the key reference level. Those zeros, it may get faded or it may not get faded. They're not continuous zeros, but there are a couple of zeros. There are 1 and 2 zeros here, and again 2 zeros here. These zeros don't attempt to fade, right? So they're not the right location to fade looking into the context. So this is what? This is initiative drive down, and this is initiative drive up. So that is why initiative drive up is nothing but a momentum buying. You're seeing a lot of momentum buyers, and here you're seeing a lot of momentum sellers, right? So there was a key auction reversal, followed by that the 1,003 levels is what we measured. That reference level is where the momentum auction selling is happening. The momentum auction selling is happening at a key reference level. That is a potential signature that this market is going to reverse, right? So it's a combination of two strategies. One of the strategies is a failed swing breakout. failed swing breakout, the swing there, you're monitoring the swing left reference level. That is where at the 11,003 levels, at that level, you're getting a reverse swing, or we can call that as an momentum drive, initiative drive down. You're getting at those reference level that you're monitoring, right? At times what happens, in this case, it happened really quick, but at times it might take a little bit of time, probably 10, 15, 20, 30 minutes to settle up. Maybe I'll show you how it looks like on our candlestick charts. So it will be, let's say, one of the reference level you're watching. This is your reference level you're watching. Is your previous swing high, where the price was went down and it came to a level. Price breaks up with the momentum. So that is a clue here. That is a momentum there, and a lot of absorption would be happening. So all these prices which is moving up, if you look into the order flow, you'll be seeing a lot of absorption of those levels. Whereas the price goes up, you'll be seeing the delta will be the delta value shows that it's a lot of absorption is happening there. Means price is hitting new high and the delta will be negative. So if you're seeing a negative delta, that means it's an absorption. Price hitting new high and delta goes negative. Delta becomes negative. That means it is absorbed by the sellers. That means it has been absorbed by the sellers, and the buying activity is absorbed by the sellers. That's what it means. And lately, the confirmation comes when the swing high, or it could be even day high also, or a previous day high, some reference level. As I said, those reference levels are intraday high, today's high, or previous day high. Some reference level, it's some major reference level which we are watching. There, at that level, the drive will be initiated with some thick selling activity here, which you can see from your order flow. You'll be seeing a lot of stack sellers coming at key reference level. That is a key to short those market. Even if you don't have a momentum auction reversal here, you'll be seeing a lot of absorption, and absorption followed by a initiative drive. So a lot of absorption happens over here. A lot of absorption here. We don't know what is the exact time frame this kind of absorption could happen. It could happen on a 5-minute chart anywhere between 10 minutes to half an hour, or even more than half an hour. And then the initiative drive happens. That is the key confirmation that this market really has to go down. So if you're not seeing any other pattern and you're seeing absorption, you should not initiate any trades here unless there are no other confirmations. If you're seeing absorption, allow the absorption to continue and then wait for this move to happen to initiate your trades there. Right. So whereas in yesterday's case, we got along with that momentum auction reversal, we got it. So that itself a tight stop loss, that itself a confirmation that this could be a potential place to short it. The absorption went for some 10-15 minutes, I guess. Yeah, 10 minutes it went, and then the initiative drive happens on the downside. So it is also a combination of a failed breakout strategy, right? So it's a failed breakout strategy, and I'm going to show you in the afternoon. There is one more failed strategy. Maybe let me check out if I can pull those feeds. Sometime back, I had that information. I think one of the community webinar we talked about it. Let me get those information. It's one of the different case study. We can observe that it talks about more about absorption, right? So absorption of absorption activity. So let's say go to order flow. One of the community webinar which we talked about it. Crash course on order flow features and order flow trading strategies. Yeah, what to observe from order flow charts. One of the case study we discussed over here. Let me run those videos. I mean, it's a 1 hour video, but of course I'm gonna go to that selected location. I'm gonna run it. Anyways, we covered most of the concepts here, but right now what we are discussing is even more in depth.
We have access to these videos, right? Community webinar.
Yes, every videos you have access to. Everything related to market profile and order flow, all the TradeZilla members have the access.
In future, whatever you say, examples are there is a next order flow session you are going to take, Feb. So that also we can
yes,
see.
That also you can access it for the next 1 year.
Okay, thank you.
So I'm going to mute first this one because I want to go to the relevant location. So we are discussing strong auctions, weak auctions, how a strong auction will look like, how a weaker auction will look like. And I mean, I would recommend you to go and watch those videos because lot many case studies has been discussed by those time. Many market observation has been shared there. So it's a must-watch video. And even if you're a beginner, it's still a must-watch video. I just want to go. Okay, maybe not in this video. Somewhere very close to 28. So I have to go back to E drive. Yes, let me get those videos. Zoom to probably somewhere around 28th of December. Maybe this. Not this one. Hey everyone, this is Rajendran here from Market Calls, and here is an interesting example using market. So this is one very interesting example here, and I request you to watch out on how I'm comparing with order flow. So these kinds of sessions happens on a sideways market very dull, boring markets where two-way auction process happens. Market moves up and comes down, where the day low also got broken, day high also got broken. So this example I'm going to show you. I'm going to run the video here now, and you'll be able to understand how the order flow behavior is what. So you watch the letter A, letter E, and the letter I, right? We're going to talk about absorption here, how the activity is getting absorbed, and there are a lot of subtle information which you will get on these kinds of days, right? So let me run the order flow charts for you, right? So it's a 12 minutes video, but it's worth watching. And with this, we'll close the session and we'll come back. It's one of the different strategy where you'll be learning absorption, and where we'll be learning about liquidity also in the markets, how the liquidity is reacting and how one can understand the nuances. Next time it's going to happen, how you can observe those information. That's what you're going to learn from this video, right? Market profile and order flow to understand the context and confidence running on in the markets, which provides better clarity about the market ideally, right? So let's straight away get into the session here. And here, what we're going to look into this information is how the trading activity went on 7th December, and how one can understand what is really happening in the markets, right? So let's get into the session here. So we got a reference level, the double distribution reference level on 6th of December. There is a single print zone here because I put a reference level over there, marking that as a double distribution reference, right? So that double distribution reference is a short-term reference. So as long as price started trading above that, I would say that the confidence is higher. So naturally, what happened on 7th December activity
Connection
is that
lost.
price opened above the double distribution balance. So here is the opening here, the A period. And naturally, trading activity started higher. So maybe I'll split up the day's activity. I'll expand a little bit, right? So price opened here. Price naturally opens over here, and immediately it rallied, and also at the same time it came back down. When it is coming back down, right? So you can see from the order flow charts. I'm going to pull up the order flow charts for the same day, and you can see here the price is coming down here. This is a 5-minute time frame chart. So initially price went up, then on the 5-minute time frame it started coming down. When it's coming down, you can see the quantity. The numbers are mentioned in the terms of lot size. You can see there the buyer side, it's more than 1,000 quantities, 1,139 quantities of buyers entered at that price, right? So maybe you cannot see 1,000 quantities in all the candles. So that means that the price is coming down, the buyers are coming and absorbing those activity, right? So the sellers activity has been completely absorbed by the buyers. And that's how the A period low has been established on that day, right? So when big buyer is showing up, that doesn't mean like it is going to be a bottom or so. But naturally, what is happening over here is that when the price is coming down, naturally the buyers are coming and supplying liquidity to the sellers, right? So the buyers are coming and kind of supporting. But that doesn't mean like price cannot go down lower, but they are coming and supplying liquidity. That is a key thing over here, which you have to remember in your mind. And let's also have a quick look around what happened in the E period, right? So now later on, market does, again, it bounced back. Buyer shown, some big buyer shown over here, aggressive buyer. So price went up. And again, price started doing some ABCDE balancing, and you see the E period, it dropped, right? It dropped, and again, the similar set of buyers showed up. So the buyer showed up at 10,650 levels, and then again, buyer showed up at 10,640 levels. Maybe I can go and show you how the activity happened over there. So that is around E period, right? So let me go to the E period. So if you look pretty closely to the E period, when the price is breaking down, the price is really breaking down the A period low. What was happening here is, again, the buyers are showing up. Again, the buyers are showing up. You can see the 1,118 lots they bought. So means when the previous low is established and price is doing something else, again, price is coming and breaking. Instead of if it is a good selling, what happens? There will be no liquidity from the sellers, and the buyers won't be coming and supporting. So the price naturally drops. So you won't find the big volume coming at all. But instead, what happening here is that instead, again, one more big buyers is coming and supporting at that zone. That means whenever that kind of big buyers are coming and supporting that zone, that means it's a good liquidity zone. Buyers are willing to supply liquidity over there. Maybe the buyer's interest is still holding up, right? So if at all, if it's a good selling, naturally the price will start selling up with low volume, but that doesn't happen. Instead, the buyers came and supported again there. And let's again flip back to the profile. Let's see what happened on later on that. And again, if you look back again here, again, buyers came and supported at the A period. They came at E period, almost 1,000 plus quantity of aggressive buying there. Price pushed up there. They pushed the price up. Again, I period, again, it came down to break the E period low, right? So the I period came down to break the E period low. Let's see what is happening over there. This time it's something different is happening down there. Maybe you can go and check what interesting it is happening down there. So if I go to the I period, of course the E period was somewhere around 10,640. Let's see how, at the I period what happened. The I period is breaking down. Okay, it breaks at around 135. 135 it was breaking. Okay, so I passed the video here. What I want to show is that when this time it is breaking down, there was a shallow breakout. That the volume was not bigger, and it is a decent volume, but it's a shallow breakout. There is no momentum. Means that whenever you're seeing a shallow breakout, that is again a sign of an absorption. Somebody is waiting there and to buy those shallow breakouts. Mostly emotional sellers, they play the breakouts. Most of the time it ends in a failure. So whenever you're seeing a shallow breakout, they are not serious players. That's what it means. Right? So the price was making a shallow breakout this time at I period, and breaking down there. When it breaks down, right? So you see that the volume is relatively less. Sellers are controlling the volume. Sellers are controlling the volume, but despite that, price went down. And then it closed with a positive candle. That it's a kind of a momentum exhaustion. A momentum exhaustion is happening down there because that is why one of the reasons sellers are showing interest below the day low, right? And the E period low is taken down. At the same time, but look at the volume here. The volumes are not supportive, and neither it is not breaking down as well. That shows that the sell side liquidity would have been exhausted probably. Or the other reason could be the sellers are not aggressive yet. If you see the sell side also, there is no aggressive sellers coming and supplying liquidity. That is one reason. It's saying that this market is not going to go down. At the same time, there is no liquidity break at all. So that particular candle, when it comes and breaking down, it pulls back up. And there is no significant volume. That is the key thing here. That means the buyers are no more willing to supply liquidity now, and maybe the sellers are also not interested. They are not much interested in breaking it down. If they are breaking it down, probably many sellers would have been formed in this zone. They would have been extending it down. A lot of break would have been happened. Right, so then sellers will be dominating all around here. Even with the low volume selling, price would have been broken down. That doesn't happen. The sellers' volume was relatively less, and then I mean it's not relatively less. The sellers, the delta is quite big. At the same time, look at the next candle. The next candle, almost in more than equal amount of buyers are jumping into this. Let me pass the video here, and. So what happened lately is that the I period, this is where the shallow breakout came. So this is where the shallow breakout came here. So buying quantity was big here, big buyers here, big buyers here. And when the day low is broken, this time there is no big buyer. In fact, it's a less shallow sellers, and then price mean reverted back. The reversal was immediate. They went on taking the multi-day high. So late, it was a late rally, and then so price also the double distribution which we are watching around there. A lot of whipsaw happened around there, and finally it took up, and then they took a strong stop hunting, because on the upper side we are watching some stop hunting levels. On that day, stop hunting happened with this kind of odds. So what you can observe in this example is that how the absorption happened at the I period. I period was a sell-off. That sell-off got an observed. The delta was negative, but despite that, market made its bottom, and the complete selling activity got absorbed. Right. So that's a shallow breakout. So whenever a shallow breakout is happening, so and then price is getting back into the day's range, it is a sign of an absorption, right? And that's a kind of a responsive trading activity. This is not an initiative trade. This is what we are seeing is a responsive price action. And that's how the situation is. So it is also combining with market profile kind of information. This is one of the reference level we use to monitor. Combining with market profile, it gives you greater odds that when exactly you have to wait for the market profile shows what is the context which is going on, and order flow tells how to initiate a trade and where to initiate a trade and why to initiate a trade there, right? So market profile gives you the overall context. Yes, with market profile you can get a better view. Like yesterday on the budget day, we know that this is a fair location to short, but order flow shows pinpoint that this is a zone exactly how to go on short, right? So it is like market profile is like a book, and order flow is like a magnifying glass. So if you want to search minor information, you just use the magnifying glass and look into those tiny piece of information, how the interaction is going at that price level precisely between the buyers and sellers. So from that you can develop the micro context which is associated with that move. Thereby you'll be able to get a finer, very tight risk when you are using these kinds of informations, right? These kinds of information, so you'll be able to get better and better only over a period of time. Maybe immediately if you want to look, all those numbers will be very confusing. Maybe when you're attending the sessions, you'll be feeling that you're able to understand, but when you go back and study, you'll be seeing everything fresh, everything you'll be seeing everything as a momentum action reversal, everything you'll be seeing as a support or a resistance. So that is where you need a practice to onboard to these systems, to have a belief in those systems. First of all, before getting into the order flow, right, it is good to do some groundwork on a couple of concepts. Some of the concepts like how the exchange how the order matching happens. So probably I'm going to give a couple of studies which you can go and do it on your own, right? So how the exchange order book matching happens. Order book matching, that means order book matching between limit order and limit order and the market order, how it happens. Order book matches, that's what you need to understand. So probably you need to understand what in pre-market how the orders are getting matched. So they call it as a price discovery. What does mean by price discovery? You need to know what is a price discovery, and how exchange facilitates the trade. How exchange facilitates, this will be covered in most of the books. Facilitate the trades. Or market microstructure. What is market microstructure? So these are a couple of books which are written on market microstructure. It's structure. Right. So market microstructure, most of the HFT players, they study market microstructure, which is nothing but how the order flow coming into the markets. So if you want to know more about market microstructure, or more about order flow, this market microstructure book could help you. There is only one book written so far, I believe, which is a decent book which talks about market dynamics at a micro level. So trading exchanges or market microstructure in practice. Right? Most of the HFT players, they study this, or empirical market microstructure theory. Again, they are nothing but auction market theory only. Right? So all these books are highly recommended books if you really want to dig into the order flow stuff. Right? So Larry Harris, probably I'm not sure why it's not. I'm not able to make up. Able to hear me? Or I just lost the connectivity?
No, sir, able to hear.
Okay.
Yes, we are able to hear you.
So market microstructure in practice. So these are the books. It will not talk about the order flow footprint charts, but it talks about how the orders comes and interacts at the micro level. So it's the one which most of the HFT players they study to understand, because the more the HFT they play on the order book, they play on the DOM levels. They try to make strategies at DOM levels. They make strategies at limit order levels. Right. So if you want to design or if you want to understand the markets even much better, market microstructure in practice it's one book where you can you'll be able to understand how the market functions, what is the facility, what is the price discovery, what is liquidity. Right? It's more of an institutional study, but yes, if you are really curious about markets, it's highly recommended to go and explore this information. Maybe they are talking about at a very small fluctuation, who is responsible, right? So maybe they talk about dark pools, they talk about smart order routing, different ways the institution does that. Smart order routing is a feature in interactive brokers. Most of the institutions they use smart order routing, especially let's say I want to buy Infosys trading at 1,000 rupees maybe in NSE, and maybe it might be trading in BSE at 1,001. So the smart order routing will be looking into the best bid. Whoever is quoting a best price to me, I'll get from that exchange. Whereas in US, they have close to 8 to 10 or 16 exchanges, right? So most of the institution, they pass the order to all the exchanges, and whoever is getting a best fill, only those gets executed. Other gets cancelled automatically. That's what smart order routing is. It's more of an institutional tool, and that you will get to know a lot about it. And then so again, why does tick size matter? Why does tick size affects market quality? So all these are good to know things, right? They're not trading strategies. It enhances your market experience. It enhances your market knowledge about probably the way you'll be thinking about the market is you'll be looking into the actual information rather than relying on some indicators, right? Relying on indicators, it's good, but relying only on indicators, it's bad thing, right? So that's the thing. You may not get the right context there. So if you are really curious about markets, and market microstructure is one study that you should not miss out. If you are an order flow fellow, if you want to be an expert in order flow, market microstructure is one recommended book. But as of now, order flow, there are no real tools out there, real books out there about order flow. But market microstructure gives you a lot of ample amount of market experience about how everything operates in the markets, right? How everything goes. You'll be having a fair idea about what is happening from the order flow perspective, or whether I'm in a high liquidity zones or low liquidity zones, what kind of money is coming in, what kind of liquidity is there today, right? So you'll be able to understand everything in and out about what on high frequency traders know. Usually it's a book for high frequency traders, but it's highly recommended for order flow fellows as well, right? So with this, I'm stopping the session here, and we'll also anything you can know about market liquidity. There are a lot of books which talks about liquidity. You can talk about that as well. So a good understanding about liquidity. Market liquidity, again, you can search in Amazon. A lot of market liquidity related books are there. Most of them are related to market microstructure as well. Some of them are handled at institutional levels. So maybe, yeah, there is one book here, market liquidity. Maybe there are a lot of books out there. So market liquidity theory, evidence, and policy, all these are what the institutional guys stuff, right? So we don't, as a retail trader, we don't focus on liquidity, but the institutions, they love to explore how the liquidity comes or how the liquidity can be triggered. So I'm not sure whether it is related to stock markets or what, because the liquidity is also a game from the banking perspective. So, or from the Fed perspective. Financially, the liquidity is a different game. So I'm not sure whether it is related to markets. If related to markets, then you just go and try out. Right, so these 5 are the primary knowledge which will help your order flow studies in a better way. So you can go and read books, or you can go and listen to YouTube videos, conversation from the institutions. It will help you to enhance your market understanding, right? So I'm stopping the session here, and at 2 o'clock we'll again meet. We're going to discuss more strategies, some more strategies on order flow and the market outlook, plus some more market profile studies. And finally, we're going to have a one-to-one conversation, like one-on-one session, like what can be improved from the TradeZilla, what you're not able to understand. Any questions you want to ask, you can ask me, and we can have a session completely on questions, only questions we're going to address in the last 1 hour. And of course, we'll be having community webinars. You'll be invited to the community webinars. You may not be getting a mail, but it will be there in the announcement section, Market Calls announcement section in the Slack. It will be there. So active members, so that's why we need active members there. So if you're active in the Slack community, you'll get to know when the event is happening, and it will not be intimated over the mail, right? So I request you people to ask questions in Slack, post your studies, try to understand, try to ask, try to get confirmation, so that enhances your knowledge as well parallelly. Right. Thank you.